Good morning, this is Rich, and the market will be reacting to USDA's crop report this morning. It was kind of a difficult report to read. We did see some big changes in some numbers, especially in corn. We did see the corn yield drop 4.9 bushels per acre down to 148.1. Saw some big changes in the I states, Illinois, Iowa, down 9 and 10 bushels respectively. So with that, the production side of it looks to be somewhat bullish. However, we also saw USDA cut the demand estimate by 400 million bushels here this morning. So when you throw all of this together, the trade's going to try to figure out how much work has already been done to ration some bushels and ration demand, and that's going to be difficult to figure out here as we work ahead. Now, someone did mention, and correctly, that we are down about 30-40 cents off the highs here in December corn, and certainly that can maybe be retraced here on some sort of a bullish response. Early calls out of the gate: corn 5 to 15 higher, soybeans probably mixed here at the start, wheat probably a little lower with the report numbers, and I'll give you those here briefly. Corn production at 12.497 billion bushels, that's down 417 million from last month, but the demand cut 400 million, 200 of that came out of feed and residual, 100 out of ethanol, and 100 million out of exports. So the bottom line, ending stocks at severely tight levels, I guess you could say, or at minimum levels, 472 million bushels forecasted, with an average farm price of $7, and that's about where corn's trading in much of the country at the present time. On the soybean side, we see production actually up 29 million to 3.085 billion bushels. That's because of the yield increase of 0.4 of a bushel up to 41.8, and ending stocks, however, forecasted up to 165 million bushels. That's up 10 million from last month, with an average farm price of 13.65. That's up 15 cents from a month ago. On the wheat side, not friendly at all. We did see a decrease in the export estimate, 75 million bushels, and production was left unchanged at 2.077, thus ending stocks up 90 million to 761 million, and that just means that there's more wheat available for feed here in the U.S. as well as around the world. The average farm price up 35 cents to an average of 7.85 for this year. And cotton, the yield was dropped as anticipated. We did see some of the southern states, I would assume, the far south and west dropped here in this month's report. Nonetheless, harvested acres were increased slightly. Some minor tweaks in some of the demand numbers basically left ending stocks just up 100,000 bales at 3.4 million bales for this year. Average price left unchanged at 95 cents. So really nothing to speak of there in the cotton report. Now, looking at the world reports, supply demand ending stocks for corn up almost 3 million tons. We saw production increases in Argentina, in Europe, in Brazil, in the former Soviet Union. So those will offset some of the drop in the U.S. numbers, and may be seen as long-term a little bit negative. Soybean ending stocks up 1.6 million tons as well, up to 62.55 million tons. So that an underlying negative factor over the top of the market. World wheat stocks up 5.7 million tons. Will surely continue to be putting some pressure on wheat. And when we look at the cotton numbers worldwide, really not much of a change. Actually dropped about 0.7 of a million bales, I guess. So not anything there to be concerned about. Looking at the trade today, initially we're going to be supportive to corn. After that, we'll see if the corn market can hold its early gains. That'll be the test, and then go from there. We do have harvest, starting to pick up pace, and certainly that'll be a negative factor for the markets. We'll look for a higher start, and we'll go from there. Have a good day.